When it comes to investing, it's not about getting rich. It's not about playing the market. It is about the consistency of putting money into the market on a regular basis. Now, a lot of people talk about it, but on this journey over the last couple weeks and over the next couple months, we're going to be investing $1,000 every single week and see exactly where we can build this portfolio to. Not just saying and talking about investments, talking about where we should put our money, but actually looking and breaking down where I'm investing personally and how the growth and the return has been going. Over the past 4 weeks, we know the market has been doing incredibly well, which is reflective in the stock portfolio that we built with our ETFs. But overall, I don't want the stocks to continue to go up every single week because it really doesn't give a true value or doesn't give a true insight into what the market does with fluctuations. Just because we've had some pretty good market upside in the last 4 weeks, the downside is much needed. And the reason for this, guys, is we're doing dollar cost averaging, meaning every Monday morning we're putting $1,000 into the market. If we have a couple of consecutive weeks that are down, we are buying the stocks or we're buying our ETF portfolio a lot cheaper every single week as it continues to go down. Now, this is what we did in 2022 as the market kept going down 20+%. We were buying on a regular basis, and that when the market recovered, we seen some incredible gains from the dollar cost averaging that we're using. So let's go ahead. I'm going to hop over. We'll break down the portfolio, guys. Let me know in the comments what you guys think about this strategy. Also, subscribe to the channel if you like the content that I'm putting out. Let's go ahead and take a look at it. All right, guys, so here we have the debt-free journey. As you can see, getting ready for retirement. We are already at 73,000, so definitely making some solid progression. If you remember, we were about 67, 68 when we started this. We put $2,000 into it so far, which I'll show you on our Excel spreadsheets of what we've been gaining. So overall, in the last 2 years, we put about 66,000 in here. Now, overall, looking at the gains in that time frame, we're up about $7,400 or 32% in the investment portfolio. Now, thinking, from September 21 to 22 to 23, we're about 2 years, 2 months into this, and we're up about 40%. Like I had said, with the dollar cost averaging and having the ability to actually make purchases all through 2022, which was a very dismal year for the stock market. And again, we're not looking at timing the market. We are looking at time in the market. If I can continue this for the next couple of years, really amplifying the growth potential of this portfolio. And again, we'll break down kind of what I haven't invested in and why we're seeing some of the different numbers in here. Now, overall in the dividends, guys, we've gotten $761 in dividends. Now we have through the last 2 years kind of changed up the portfolio a little bit. But now we've solidified exactly what we want to do and how we're going to invest in here. And I'm going to show you the strategy that I'm using to actually build this portfolio. Now, looking at what we own, these are the slices or the pies. That is the way that M1 Finance breaks them down. I have a link down below, guys, if you do want to join M1 Finance and build out the portfolio that I have. But you can see a bulk of what we had going into the last couple of years was the VOO, and it was exclusively the VOO. 100% of the holdings were in the S&P 500. Now, I know some people say, well, there's stocks that outperform it or ETFs or mutual funds that outperform it. There's a lot that underperform it. I'm doing pretty well, again, looking at the gains and the returns that we're seeing right here. But now we did break this portfolio up. Big shout out to Professor G. Went through a couple different things as well as financial advisors that I have access to at work. Built this portfolio, and again, VOO S&P 500. This is, of course, one of the fan favorites. Even when you look at Warren Buffett, he says that everybody should own the S&P 500 in their portfolio just because of the longevity of it. We have seen about an 8 to 10% growth rate with this specific ETF, which is absolutely incredible. And it's also been around for an incredible amount of time. Now, the second one that I hold is the SCHG or the Schwab US Dividend Equity. We know over on YouTube, guys, this is probably one of the absolute fan favorites. Again, that a lot of people do hold. There's always a ton of hype about it. But overall, I'm holding this one because if we see some downturn in the market, the equity or the dividends that we do get from this will kind of level out. Now, this, of course, is much cheaper, guys. When you see the SCHD and even breaking it down right here, it is only $68.99. Now, this, of course, has went down considerably, but with the cost ratio, buying it at a discount is what I was really thinking. So again, buying this at about $70 a share, you can see we have about $1,400 in that one. But with the dividend yield that it is putting in there, makes a pretty good return. Now the VUG is our growth fund. You can see guys, 38.6%. Overall, this one, again, looking here, almost $280 per share, which means, again, not going to have as much dividend return in that one, but that is what I'm relying on for a lot of the growth. Now, there is a pretty significant overlap with the VOO, the SCHD, the VUG. The buildup or the composition of them are different, but there is some overlap in some of the companies, which I am completely okay with. And you'll also notice, guys, that I don't have international. Now, I don't know if any of the international is in the QQQM, which of course is, I believe, the NASDAQ 100. But overall, US based, majority of the time they do outperform. I like keeping everything here, just a personal preference. You could add some international in there. You could change it up a little bit. But again, looking overall, now you'll notice too that some of the actual in the target. So I actually put these at 25% each. So every time that I am investing, it is going into the SCHD, it is going into the VUG, it is going to the QQQM. That is where all of the money is going that I'm putting in because the VOO was held so heavily. Now I could go ahead and rebalance the portfolio, but I don't want to sell out of the VOO because there could be tax implications if I do sell out of the position. So this is what I'm going to put into. Now, what we're doing to get the funds in here is going up to our borrow tab. And you can see, guys, credit limit is 29.2. Now, I did repay everything we had borrowed. And this is my plan, guys, over the next couple months, even years, is to keep this credit limit under the 20,000. So we're going to go ahead. We're going to do the same. We're going to borrow on margin. We're going to put it into our debt-free journey. And we're going to do 1,000, which means tomorrow morning, monthly cost is roughly $6. We're going to go ahead and continue right there, confirm. Now, this means that coming into tomorrow, so you'll all notice going back to the invest tab, now we have $1,000 in our buying power, and it shows there is a pending trade that is happening. Like I had said before, guys, this is going to be the one that is going to be buying the breakout right here, the QQQM, the VUG, and the SCHD. This is going to be the breakout that it is buying, and you can see the dollar amounts that it's buying. And essentially, I will get to a point once we're going through and investing on a regular basis that these will match at the 25, 25, 25. Because if you remember, the VOO was at 100%. Now it's already down to 94 because we're putting other investments and we're putting more money into the other investments. So what does it look like breaking down, and what did we make on a week-to-week basis is another thing that we want to look at. So here is the Excel sheets, guys. So on 11/13, we put our $1,000 in. This is where we were on this line. This was the bear. This is where we started doing this 3 weeks ago. And again, this is the third week, or the $3,000 that we put in there. So overall, we were at a 22% return. You could see the cash flow that we had in there. Overall, the market gain was 43, which is really, really strong. Like I said, dividends remain the same, but that took our balance to a $69,000. There was no difference at that point. Again, this was measuring the starting point, and then I measured the dollars or the actual value of our 4 investments that we have right there. So breaking into week 2 right here, guys, our 22 went to a 29%. Now, of course, we do have a little tiny bit that we did pay for borrowing the money, which that's okay. I'm not really, it's kind of negligible right now because it was about $1 for the amount of time that we held it. But you can see the net cash flow was the same. We had that other 1,000 that was ready to invest. Market gain went to a 66.95, which means our balance went up about $1,600 in a week, bringing us to the new balance of the 71 as we see right there. And you can see, guys, the VOO performed incredibly well. QQQM went up a little bit. VUG really didn't do much on the growth part, neither did the SCHD. Now we fast forward to where we are as of today, which that's actually tomorrow for the investing of the 1,000. Net return, as we see it right now, guys, almost 32%. So when you look from the 13th to the 27th, so over a 2-week span, we've gained almost 10% in this portfolio. And our net cash flow, because we did put that extra 1,000 in there right there, is now at 66. So it did go up a little bit. Now this net cash flow, this first one, was recorded after that initial deposit. So this puts us right on track, guys, with the 66. So the market gain is at that 74.03 as we did see. Dividends remain the same. Now, I believe it is going to be December, the end of December, that we'll see a little bit of dividend movement. But our balance in the last 7 days from Sunday to Sunday went from 71 to 73. So we made about 1707 in there. And again, looking in the big difference, guys, the VOO, the value went up incredibly, incredibly high. Now, also remember though, with the VOO is this is where we do have the bulk of the money invested. So when it goes up, it's going to go up dollar wise much, much faster than everything else. But even the QQQM, we've seen a little gain, the VUG and also the SCHD, we did see a pretty decent gain over the last week. So guys, here we are. And again, I was watching a video earlier today with Dave Ramsey, and he said a lot of people talk about investing, but who are the people that are actually doing it? That is the way that we make millionaires, is the consistent investing in the market over an extended amount of time. So again, if I keep this up for the next 5 or 10 years, the amount we're going to have in this portfolio is just going to go astronomical. When you start getting the compounding in there and the growth factor that comes with it, it's going to be huge, guys. And I cannot wait to see where it is and share this journey with you. All right, guys. So that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.